What if your next paycheck suddenly got bigger? Not because you worked longer hours or picked up a side hustle, but because the government finally took less. What if every single dollar you earned in tips was yours to keep, tax-free? What if your overtime hours weren't just extra income, but untaxed income? What if you could finally deduct the interest on your auto loan, reduce your phone and internet bills with a new tax write-off, and watch your cost of living drop, all thanks to a massive new tax bill? Now take it a step further. Picture every child born in the United States receiving a $1,000 head start, deposited into an investment account designed to grow tax-free and only be used for life-changing moments like buying a first home, starting a business, or paying for college. This isn't a fantasy or a campaign promise, it's law. Welcome to the Big Beautiful Bill, the most sweeping tax reform package in years, just signed and set to take effect by September 30th, 2025. This bill revives and expands Trump's original Tax Cuts and Jobs Act, keeping income taxes lower, renewing bonus depreciation for business owners, and preserving pass-through deductions for entrepreneurs and freelancers. It throws a lifeline to retirees by eliminating taxes on Social Security benefits for most Americans, and it supercharges local tax deductions by raising the SALT cap from $10,000 to a massive $40,000. In short, it's designed to reward work, investment, and American families. But it doesn't come without controversy. This same bill guts clean energy incentives, strips away the $7,500 EV tax credit, and eliminates federal support for solar panels and energy-efficient home upgrades. Environmental advocates call it a step backward. Economists warn of a ballooning deficit, with projections showing it could add more than $3 trillion to the national debt over the next decade. And as always, there are hidden loopholes and income thresholds that may leave some Americans out of the party. So what does this really mean for your wallet, your retirement, your family, and your future? Is this the greatest middle-class tax cut in a generation, or a gift to the wealthy wrapped in populist packaging? Let's pull back the curtain on the big, beautiful bill, break down every key change, analyze the winners and losers, and explore how this could reshape the American economy, one paycheck at a time. Welcome to WealthEchelon, your go-to spot for smart investing, in-depth ETF insights, and book reviews that help you build wealth. On this channel, we explore everything from the best investment strategies to the latest trends in ETFs, and provide valuable takeaways from books that can transform your financial journey. Whether you're a beginner or an experienced investor, our goal is to give you the knowledge you need to make informed decisions and grow your wealth. If you're ready to elevate your financial game, hit that subscribe button. And don't forget to turn on the bell for updates on all our latest content. In a sweeping move poised to reshape the American tax code, the Trump administration has signed into law a new bill that promises significant financial relief for working families, business owners, and retirees, but not without controversy. Dubbed the Big Beautiful Bill, this new legislation extends key provisions of the 2017 Tax Cuts and Jobs Act, introduces targeted new benefits like a $1,000 Trump account for newborns, slashes taxes on tips and overtime, and eliminates taxes on Social Security income for many. However, it also rolls back clean energy incentives and creates a fiscal burden estimated to cost trillions over the next decade. This article breaks down the entire plan in depth and explores how it will impact you starting September 30th, 2025. Tax Cuts and Jobs Act extension. One of the cornerstones of the Big Beautiful Bill is the permanent extension of the Tax Cuts and Jobs Act, TCJA. Initially passed in 2017 and scheduled to expire by the end of 2025, this act slashed income tax rates across all brackets and introduced generous deductions for pass-through businesses, among other provisions. Under the new bill, the top tax bracket will remain at 37% instead of reverting to the pre-TCJA rate of 39.6%. This is a major win for high earners and business owners who would have otherwise seen their tax liabilities increase in 2026. The bill also renews bonus depreciation rules, allowing businesses to immediately deduct 100% of the cost of certain assets in the year they are placed in service. The 20% deduction on qualified business income for pass-through entities, such as LLCs and S corporations, is also here to stay. Together, these provisions are designed to incentivize capital investment, boost entrepreneurship, and keep American corporations globally competitive. No tax on tips or overtime. Perhaps the most headline-grabbing feature of the new tax code is the elimination of federal income tax on tip income and overtime wages. Service workers, bartenders, hotel staff, and gig economy workers stand to benefit substantially, as 100% of their tips will now be tax-free. Similarly, overtime pay, which is often heavily taxed and subject to withholding, will now be exempt from federal income taxes. The idea is simple. If you work more, you should keep more. Critics argue this will shrink government revenues and disproportionately benefit lower-wage workers, but proponents say it's a major boost for the working class. By removing the tax burden on extra labor, this provision aims to reward hustle and reduce the gap between base wages and take-home pay. The ST Deduction Cap Lifted. Another key reform is the lifting of the state and local tax SALT deduction cap, which was introduced in the original TCJA and capped at $10,000. This cap disproportionately affected residents in high-tax states like California, New York, and New Jersey. Under the new plan, the SALT deduction limit will rise dramatically to $40,000, allowing taxpayers in these states to deduct more of what they pay in state and local taxes. This is a major benefit for upper-middle income and high-income earners living in blue states. However, it has also opened the door to potential abuse. The bill contains what some are calling the SALT loophole, which allows for strategic income shifting and tax arbitrage, potentially reducing IRS collections significantly. It remains to be seen whether this provision will face revisions or legal challenges. Auto loan interest becomes deductible. In a surprising move aimed at car owners in the struggling auto industry, the bill introduces a new provision allowing interest on personal auto loans to be tax deductible. Similar to how mortgage interest is treated, this could translate to hundreds or even thousands of dollars in tax savings for American families. The deduction applies only to new auto loans taken after the law goes into effect, and only for cars used at least 50% for personal or family use. Luxury vehicles above a certain threshold are excluded. While this might drive more auto sales and consumer borrowing, some economists warn it could encourage reckless lending and inflate the auto credit bubble. The Trump account, a $1,000 head start. One of the most attention-grabbing provisions in the bill is the creation of the Trump account, a $1,000 investment account for every eligible child born in the U.S., starting after the bill's passage. Unlike direct cash transfers, this money will be invested in a government-backed growth account and can only be accessed for qualifying expenses such as first-time home purchases, educational costs, or starting a business. This echoes earlier proposals from both sides of the political aisle aimed at wealth building for future generations. The hope is that by age 18 or 21, the account will have grown significantly, giving young Americans a meaningful head start in life. While $1,000 may seem modest, with compound interest over 2 decades, it could serve as a seed for entrepreneurship, college, or property ownership. Critics argue, however, that it's a symbolic gesture rather than a game changer, especially for lower-income families facing immediate needs. Eliminating clean energy incentives. In a highly controversial section, the bill eliminates federal clean energy incentives. This includes the widely used $7,500 tax credit for electric vehicles, EVs, and multiple credits related to solar panel installation, energy-efficient home upgrades, and battery storage systems. All of these programs will be phased out by September 30th, 2025. Supporters of the move claim it's a matter of fiscal responsibility and fairness. They argue that wealthy households and corporations disproportionately benefited from green tax credits, while taxpayers at large carried the cost. Critics, however, are sounding alarms, warning that the rollback will slow EV adoption, undermine climate goals, and give foreign competitors like China an edge in clean tech manufacturing. Solar companies, home builders, and automakers have already begun lobbying for a reversal or amendment to this portion of the bill, fearing significant drops in demand and innovation. Climate activists call this a massive step backward. Tax relief for Social Security recipients. In a move designed to win favor with retirees, the bill adds a $6,000 standard deduction for individuals receiving Social Security benefits. For married couples, this increases to $12,000. The deduction begins to phase out at $75,000 individuals and $150,000 married couples in annual income. This effectively means that many seniors will no longer pay federal taxes on their Social Security benefits, especially those living on fixed or moderate incomes. This is a long overdue reform for many retirees who view the taxation of Social Security as double taxation, since they already paid into the system during their working years. However, wealthier retirees who also collect pension or investment income may still face taxation due to the phase-out thresholds. Even so, the provision marks a significant shift toward reducing the tax burden on seniors. Additional savings and hidden perks. Beyond the headline reforms, the bill is packed with a slew of smaller but impactful savings. One provision allows individuals to deduct up to $600 annually for phone and internet bills, as long as those services are essential for remote work or business. Another expands education-related tax deductions and simplifies the process for claiming student loan interest deductions, even for private loans. There's also an expanded child tax credit for lower-income families, increased thresholds for capital gains taxes, and relaxed rules around 401k early withdrawals for those under financial hardship. These smaller components add up to what supporters are calling the most family-friendly and pro-worker tax package in recent history. The price tag and the downsides. Despite its many perks, the big, beautiful bill comes with a massive projected cost. According to independent analysts, the combination of tax cuts, lost clean energy incentives, and new deductions will add more than $3 trillion to the national debt over 10 years. The Congressional Budget Office, CBO, has yet to publish a full analysis, but early estimates suggest major revenue shortfalls unless offset by future spending cuts. Critics also point out that the bill disproportionately benefits the wealthy, corporations, and certain red state demographics. The removal of clean energy incentives, in particular, is seen as a concession to oil, gas, and coal interests. Furthermore, the $1,000 Trump account, while symbolically powerful, may not have meaningful long-term effects on wealth inequality unless expanded and better targeted. Additionally, while removing taxes on tips and overtime is popular, it may complicate wage reporting and enforcement at both the federal and state level. Some states may continue taxing these sources of income, leading to potential confusion for taxpayers. Who wins and who loses? The big, beautiful bill is being heralded by conservatives as a return to Reagan-era tax policy, pro-growth, pro-family, and pro-America. For millions of middle-class Americans, especially those with kids, working overtime, or collecting tips, the changes could result in noticeable boosts in take-home income. Seniors on Social Security and new parents will also find welcome relief. However, the plan is not without significant downsides. The rollback of green energy incentives is a setback for climate goals. The deficit implications are severe, and questions remain about how sustainable these tax cuts really are. In short, this bill reflects a bold shift in American tax philosophy, one that rewards work, reduces burdens on families and seniors, and favors traditional energy over green. Whether it's the start of an economic boom or a fiscal time bomb remains to be seen. Thank you for watching WealthEchelon. We hope you found valuable insights that will help you on your investing journey. If you enjoyed the video, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss an update. Keep building your wealth, and we'll see you in the next video. Don't forget to check out our other videos for more investing tips, ETF strategies, and book reviews to continue growing your financial knowledge.